Welcome to Deep Dives. I'm Brook Stroud, a principal at Alumni Ventures. If you're curious about what the connection is between Henry Ford's Model T, APIs, and Bobby Fischer, I'll cover that today and more as we dive into the world of API-first companies and demystify how these specialized software companies are accelerating technology innovation and unlocking billions of dollars of value for their customers. I'll start by describing what APIs are, why they're important, my investment thesis, what to look for and what to look out for, as well as some companies of interest and resources for those looking to learn more. Defining the API economy. APIs, or application programming interfaces, enable software to communicate with each other and exchange data. They provide the picks and shovels of our modern digital age, enabling core infrastructure and software and our software building blocks so that developers can build without needing to code everything from scratch. APIs let companies leverage years of other companies' work in seconds by allowing developers to write a couple lines of code and voila, connect their software via a simple interface to another company's specialized software solution or platform. This is the magic of APIs. A couple lines of code and customers can access the full strength of an entire best-in-class software solution. If you're familiar with the Ray Charles song, Tell Me What I Say, then you're familiar with the concept of call and response. Think of an API as software's version of call and response between two systems. An API call or request is sent out to another software application, which then runs its internal processes and sends a response back. In Apollo 13, the astronauts call Houston about a problem, and immediately a large group of talented NASA engineers get to work behind the scenes to resolve the problem and respond back. There's an analogy here for APIs. A call or request goes out, a bunch of complex work happens quickly behind the scenes, and an important response comes back. In this deep dive, I'll be focused on a segment called API-first companies, which are a subset of software as a service companies or SaaS. You can think of this as they're B2B, so they're selling their products to businesses. These are not software companies selling directly to consumers such as you or me. Let's talk about the power of outsourcing expertise and the big question of a buy versus build approach. Also, what's the connection to Ford's Model T? To borrow an example from Rapid API's CEO, Ford initially created every car component for their Model T from scratch and ran every part of the manufacturing process. This was true of other car companies, and as the auto industry matured, other companies formed specializing in certain pieces such as windshields, tires, or paint. Today, a complex supply chain exists for the automotive industry. Well, the same is true in software and computing. In the 1970s, companies like IBM created and sold entire systems, fully integrated hardware and software. As the market grew and matured, new companies popped up that specialized in creating operating systems. Next came companies selling applications to those operating systems, and then companies selling pieces of software for building applications. As you can see, a pattern is clearly emerging. As markets expand and mature, the product unit gets smaller. Where once companies created entire computers with hardware and software, companies proceeded to develop just the software and later just small parts of the software, individual applications. So why does this all matter? Well, this is the critical point. Every business has to decide where to focus their time, capital, and talent, and where to outsource non-core competencies or expertise. We are constantly outsourcing work in our daily lives when we call an electrician, hire an accountant, buy groceries, or go to a doctor. Why now? Well, there's a lot of contributing factors to this rise of the API economy. A few to mention are the rapid adoption of smartphones and use of mobile apps, but a really big one to highlight is the growth in cloud computing. Amazon Web Services, or AWS, changed everything. It demonstrated that web APIs could be used to deploy infrastructure, generate revenue, and fundamentally alter the way companies build software and do business. This combination of cheaper processing power and the scalability of cloud computing enables technology companies to rapidly grow. It reduces CapEx, and more seamlessly, they can connect via APIs to third-party software and infrastructure. An easy example is we're no longer hosting a bunch of large servers on-premise. We generally tend to outsource that to AWS, Azure, or other companies. In this slide, I'll run through some of the key success factors for API-first companies. Number one, provide mission-critical functionality. These companies deliver software that is not a nice-to-have, but instead is essential to customer success. They do this in large and fast-growing markets. For example, if I'm running a successful e-commerce store selling Argentine belts, building my own payment and data security software shouldn't be my focus. But accepting customer payments and protecting their personal data, that's mission critical to my business every single day. These companies abstract away complexity. API software should remove complex and burdensome work for developers and deliver simple, less expensive, and better solutions than could be built in-house. The reality is, if it's easy to build, others will do it. So we're looking for companies providing elegant solutions to difficult, time-intensive work. We like API companies attacking friction, such as complex regulatory or compliance, aggregating large networks, or unique data sets. The next one is VC's favorite buzzword, and for a good reason, network effects. The best API companies also have network effects. As these companies gain additional customers, their product improves for all their customers. For example, the more e-commerce transactions that Signified reviews, the better it gets at detecting anomalies and preventing fraudulent charges in real time for all of its customers. The largest companies tend to capture more of their customers' value chain over time by layering on additional high-value services. If you think about Stripe, they've expanded beyond processing online payments, and now they've built out this full developer platform of programmable infrastructure, and they have offerings across payments, banking, billing, fraud, treasury, and more. As a quick side note, there is a creative tension here between a land and expand business model and making sure that a company avoids scope creep by trying to be too many things to too many people. Lastly, this one isn't as glamorous, but it's important not to overlook. The best companies in the category provide strong documentation. Quality API documentation serves as a reference guide or a detailed instruction manual for developers, and it helps them integrate and update their API connections to the software. So if you want developers to have a delightful experience and become early adopters or evangelists of the product, you want to make it as easy for them to adopt your product as possible, and that reduces time supporting new and existing customers for the API company as well. Macro investment thesis. API-first companies will continue to do the following. Fundamentally simplify how software is built. As we've said, API-first companies abstract away the messy, the repetitive, and the complicated. Netscape's CEO Jim Barksdale famously said that the only way to make money is bundling and unbundling. As more software development becomes more and more specialized, we'll see developers want to simplify the number of different API-first companies they work with. Lower barriers to entry for company building and product innovation. So we want to supercharge teams across functions by speeding up experimentation cycles and reducing time to market. So if you think about Uber could focus on growing its platform of drivers and riders and connect to third-party APIs that specialized in maps and messaging and payments instead of building all that highly complex software and data set in-house. And that allowed them to grow much faster. Adopt artificial intelligence tools to enhance the developer experience and expand existing competitive moats. Fuel new category creation and accelerate digital transformation in legacy markets. API-first companies like Stripe or Twilio and Okta created new markets and dramatically expanded existing categories. Twilio changed how we engage with companies by providing developers access to text message and voice messaging functionality across a global telecommunications network through their API. Uber, Lyft, airlines, your favorite brand, or even your doctor can now integrate text message updates, marketing, or alerts without having to manage 100 telco relationships, without needing to know your personal information and number, and they don't have to build all this software themselves. Lastly, we believe that new API companies will be an important part of the digital transformation and the values and value companies' data in this. Every company is a tech company economy. Challenges to the API first business model. All right, so here we have Maslow's hierarchy of needs for API products. We start at the bottom with the most basic needs for survival, and we move up from there. Trust me, there's a startup graveyard of companies who failed at the basic needs before ever getting into the psychological needs. So let's talk about some additional challenges to this API business model. Lower margins than traditional software as a service. So traditional SaaS products tend to have high upfront cost to build, but lower marginal cost for each additional user. APIs they have more complex pricing models. A lot of APIs have either a usage-based pricing model on the number of calls made by the API, or they take a hybrid approach of a recurring payment or partner payment in addition to a usage-based payment. The quick summary is hard to price rhymes with harder to explain to customers, so we think it's important to be very clear and thoughtful about monetization strategies. Competitive markets and artificial intelligence. Risk of new entrants and commoditization of a stagnant pure play product offering. As we've discussed, API first companies need to go beyond simplifying code. One trick ponies get put out to pasture. AI can enhance and expand competitive advantages, but it will also destroy many businesses whose value propositions are easily replicated or replaceable by AI. Lastly, security. APIs are gatekeepers to sensitive data, and they are built expressly for software to communicate with each other, which can mean sending valuable private data back and forth. That makes them a lucrative target for bad actors. As the number of APIs used by companies and the volume of traffic continues to grow rapidly, so too does the opportunity for malicious attacks. As the late and great J.J. Cale sang, "Money talks, it will tell you a story." So let's look at the numbers and some of the dollar amounts associated with the API economy. 14 billion plus raised by API first companies. The US had 193 billion API calls in 2022, making it the #1 country in the world for API calls. As a quick reminder, API calls are the medium by which one software communicates with another piece of software. So it calls and then requests information or a service, and the response is provided back. Developers are spending developers are spending most of their time on APIs. According to a survey of developers, nearly 40% of large organizations use over 250 APIs, and 71% of developers plan to use even more in the coming year. 51% of respondents said that more than half their organization's development effort is spent on APIs, and that's up from 40% in 2020, so just 2 years ago. This underscores the increasing role APIs serve as building blocks of modern software. Lastly, CTOs are even more optimistic. 89% of CTOs committed to increasing or maintaining API-related investments. Venture companies of interest. So as you've seen from some of the charts on other slides and market maps, there's just a ton of different API first companies across a lot of different verticals and subsectors. So I'll try to keep this quick and just run through a couple examples. Stitch is focusing on making user authentication radically simple for developers and users. They enable companies to improve user conversion, retention, and security by having a passwordless authentication, so you're not getting slowed down by forgetting your password. The company raised $125 million from Benchmark, Index, Coatue, Thrive, and others. So some really strong investors in the mix. Unit is a banking as a service API that helps companies launch banking products in weeks instead of years. What they really allow is companies to avoid all the heavy lifting and regulatory and compliance work required to offer banking products. And they have the largest set of banking features available to developers. So you can add features into your products such as bank accounts, debit cards, credit cards, payments, lending, and they have deposits insured up to $100 million, which in the aftermath of Silicon Valley Bank is pretty compelling. These embedded banking solutions are for customers across consumer banking, business banking, as well as freelancers. And so anyone wanting to add these type of features into their product can go to Unit and not have to build everything from scratch. They raised a $100 million Series C led by Insight Partners, and their previous Series B was led by Excel. Asana Salute is not as well known. It's a healthcare infrastructure company specifically building end-to-end digital healthcare experiences. So it's a patient-centric software where you use their API and you can have one-click telehealth, patient monitoring, onboarding and appointments, and sending and monitoring online prescriptions. And you do that all in a compliant way across different countries in Central and South America. And so when we go back to compliance and regulatory hurdles, the fact that this infrastructure allows companies to build telehealth products into their app or their product and then remain compliant across a number of different countries is super compelling and exciting. A few more API first companies to highlight. The first is Human API, which is a one-stop platform for health data and digitizing workflows. So Human API's platform is essentially a big data aggregation play. And their API provides a compliant way to access over 30,000 health data sources. And these include employee health records, patient portals, pharmacies, labs, wearable devices, and fitness apps. The next is Method Financial. This is an Alumni Ventures portfolio company. It's based in Austin, Texas. And through its single API, Method enables app developers to easily retrieve and pay any of their users' debts. This includes credit cards, student loans, car loans, mortgages, and other things. Method manages the entire data retrieval and money movement process. So it keeps its customers out of the flow of funds by handling compliance requirements, identity verification, and bank partnerships. And through this one API, an app developer has access to 15,000 plus lenders in the US, covering 95% of consumer debt. So as an example, if let's say Truebill, a personal finance management app, wanted to use Method's API, they could use it to pull up all the various lines of debt from an individual using just that individual's phone number, and then easily send payments. And so that could be, an automated payment to a car loan, as an example. The company raised a $16 million Series A this past fall from Andreessen Horowitz. The third one and final one is Duffel. Duffel provides embedded travel booking software. Duffel's API enables developers to offer their users intuitive search and booking for flights, hotels, and car rentals, as well as loyalty programs. And you get to do this all within your own app or your website. By using Duffel, developers can save valuable time and resources because they're avoiding the complexity of direct integration with outdated and clunky travel booking platforms such as Sabre. They're also avoiding having to navigate regulatory requirements, super long processes, and the endless number of suppliers. So with these three companies, we're seeing all of them handling complex, messy work on the back end. And this work includes data aggregation of sensitive information, compliance and regulatory work, as well as managing a very large amount of partnerships and service providers. This slide just has a bunch of different other sources you can look at if you want to go deeper. There's some pretty good blog content. The Health API guy is a blog, and they go very deep, long format, but also quite interesting. I'd also point to some of the podcasts. In particular, that APIs all the way down is from a Packy McCormick Not Boring article, which I thought was fantastic. So some other sources to check out, whether it be blogs, articles, or podcasts, and there's many more. Okay, so in summary, we're looking for API-first companies solving mission-critical work that's painful to build in-house and not a core competency of the customer. These companies allow customers to focus their resources on their competitive advantages, increasing market share, and then they can outsource other functions to best-in-class technology solutions. As a review, the best API companies delight developers. They constantly improve and increase switching costs. They capture more of the value chain by layering on services and accelerating product innovation for their customers. So if we look at this volcano on the right, this is back of the napkin drawing from the really early days of Plaid, where the two founders laid out how they thought about their product roadmap. So you can see at the top was their initial product, and then as you go down the volcano and underwater, you see bigger and bigger and more opportunities to layer on value-add products for customers. A point I don't want to skip over is the best API companies are going to be enhanced by AI. That's going to accelerate innovation and expand existing competitive moats. The bad news is a lot of API-first companies over time will face increasing competitive pressure from artificial intelligence, and a lot of them will go out of business and be replaced by it. So that's the bad news. The good news is macro tailwinds from cloud computing and mobile apps, plus the specialization of companies, the rise of cloud-based infrastructure and services, and the prevalence of mobile apps will continue to provide a strong tailwind for the growing adoption of API-first companies. This is not changing. When you look at the numbers on expansion of cloud computing, it continues to grow each year. So this is super exciting for the sector. There are a number of challenges. I'll just highlight a few. Brand awareness and customer/developer adoption in a noisy category with an increasing number of new entrants will make it harder for companies to stand out and be found and adopted. We'll be keeping our eye on the market for more adoption from legacy industries and how they can use APIs. So I'm thinking big manufacturing, new category creators, and we also really want to watch the impact of artificial intelligence on developers' toolkits. And we've seen a lot of changes in the last 6 months, and we expect a lot more in the coming years. So thank you for listening to this API deep dive. I appreciate any questions or comments. Feel free to reach out to me, and I hope you enjoyed it. Thanks a lot.